Hello. In this video, I'm going to talk about how to find liquidity in a market. And specifically, I'm going to be talking about using 3 different markets to find the best point of entry based upon when there is enough liquidity that all 3 markets move simultaneously. For this example, I'm going to be using Range Hunter as it's the most visual, but this works with every single module in Jackrabbit. Now, I am trading on the USD market, so this is my primary coin. Range Hunter is just the basic settings. Nothing special about them. I am holding the candle for 3 bars because I am using Range Hunter more than once. I am examining and cross-comparing the BTC market and the ETH market. The net result is when all 3 markets have a shift to where all 3 markets show a purchase, then there is enough liquidity to get the perfect entry points. The final market is ETH. You can use multiple exchanges. I just preferred and chose these based upon historical analysis. Now let's go back up to the first chart and talk about the profits. I'm going to hide Range Hunter for now, so you can see 7% profit. Now you can go for higher profits if you want. So there it is, 7%. No deviation. I'm letting Range Hunter drive that. Let's darken this up a little. So for 6 positions at 7% and roughly 1 month, I'm making a 28% profit on my initial position size. And I have 4 into 13, roughly 3 positions per trade. 7% of 11 is 99 cents, I think, almost $1, maybe a little less. Not bad. I'm sure the math gurus will have this already figured out. So let's actually start by going and looking at the chart. I'm going to leave Range Hunter hidden for the time being. But here we go. This is where all 3 charts have to line up. The USD Range Hunter, the BTC Range Hunter, and the ETH Range Hunter all show purchases. All 3 markets show a movement. There is enough liquidity and volume for selling on all 3 markets that it gives buy opportunities that move all 3 markets. And now take a look. If I drop this percentage down, I could sell out here easily enough. If I raise it, I could sell out up here easily enough. But this is still not a bad number of candles for waiting for a nice little profit when my maximum is 6. Now this is not a fast process, obviously. It doesn't happen very often that all 3 markets line up. But when it does, you'll notice all 3 of them have very good runs afterwards. So when you have all 3 markets lining up, you could just use this as a purchase and then do a manual sell when you feel comfortable. Or use another approach to do a manual sell, like maybe a trailing. There are a lot of ways to handle these markets, but it works because of the markets themselves. Now, you cannot trade BTC or ETH with this approach, since you need to use 3 different defined currency markets to get the best opportunities. But this does open a big world of all of the altcoins for finding very good opportunities to capitalize on. Such a process is important because it gives you some very clear and concise entry points, and it gives you a very considerably generous profit. Now, you could probably tinker with this more and squeeze every dime out of it. For example, let's see if we can okay. Yes, you are looking at 15% profit. And this shows you it's sustainable at 13, and the number of trades did not drop, and the number of purchases per cycle did not increase. So this is a sustainable trade margin. That is the kind of entry point that this can give you. Now let's see how it looks on the actual chart. Let's go back and look at the trades. See how long they took to actually achieve this, well, breathtaking profit. So here we are, 15%. And if you wanted to squeeze a little more out of it, you probably could. Let's go take a look at the rest of the trades. Again, 15%, and this one looks like it can do a lot more as well. It's just a matter of your risk and how much exposure you're willing to take. But 15% on a $100 position, that's $15. If you use 6 trades, that's a $90 profit off of one trade. So one coin at 15% position could easily break even for Cryptohopper, Jackrabbit, so forth. But if you have the budget. Because as you see, this here, we're starting to get into a little bit of a gray area where you may not want to push your luck. But still, the results are spectacular. So I personally prefer 7% just because it gives me a little bit more balance. But as you can see, looking at this market, even if you did push your luck, let's see, how much can we push our luck? The thing that I don't want this number to go up, and I don't want this number to go up. So let's push our luck. How far can I push it? Okay, 20% is too far because your maximum buys per cycle went up and your trade cycles went down. So let's do 17 and 17. Okay, we're at 15. Okay, I would say 17 is probably as far as you want to push your luck with this chart. And even then, realistically, I don't know if the market is always going to be this consistent. So still, I would recommend choosing a lower value appropriate to your risk assessment. But this is still spectacular. In fact, you would probably want to keep your average profit and your preferred profit reasonably close. So let's see what that looks like. Let's drop back down to 12. All right, it says 11.9. So we're pretty close to the 12. So let's go 12.7. We're starting to separate. 12.8 to 14. Okay, I wouldn't go above 12%. 12% is consistent with this value and this value. That's a reasonable process and a consistency that is appropriate to the strength of the recipe. But still, 12% profit on every single trade. All 4 trades. Now, while that's not guaranteed on every single market, it certainly does really help the average. So, this kind of an approach is a winner. It does well, it stays well, and it just gives you a good basis. So let's turn on Range Hunter again. It looks like a lot of noise, but you see just how quickly this gets weeded out. Now let's go to, as you can see, the BTC market, not a lot of traffic. USD market's very noisy. BTC isn't. Same thing with the Ether market. Not very noisy. Not for the confirmations. And that's what we want. We want simplicity and clean markets. Now, I could turn off, in fact, I think I will. I just got to remember to turn them back on. Here's the market, and I'm going to turn this off for now so it's not confusing, since the results aren't going to be stable. So here are the markets as they are, without the confirmations. Not very much traffic in BTC, a lot of noise in ETH, and a lot of noise in USD. So you can see by using all three markets, you get rid of a lot of unnecessary purchases. And you really begin to see just how well your entry points become. Now, when you're doing this kind of comparatives, you are going to see some weird things in the charts. That's normal. Remember, everything is pegged to the USD scale right now. And so it's kind of out of whack in terms of the ETH scale and the BTC scale. It's strange, but not going to cause problems with the mathematics. You could separate these charts out individually to get an idea of how they correlate on the actual grid. And it probably is a good idea to do so just to help you fine-tune your analysis. But as you can see, some really great opportunities here. Okay, now let's get things reset properly. Don't want to make the mistake I made earlier and forget to turn everything back on when I was running my test analysis. So any coin that is represented in the USD, USDT market, the BTC market, and the ETH market can use this type of analysis. And that's really what makes this whole process incredibly profitable. Try it out with your favorite coin. See what results you get. Be sure to like the video, leave a comment. If you know somebody that's struggling with entry points, show them this technique. Until next time.